Hi everybody, that's Tuesday, April 1st, 2025, and let's go look for the order block model for the day. This is the monthly time frame. You can see that we took the liquidity of that candle, which is great. Then let's go down to weekly. On the weekly time frame, we can see consequent encroachment of that wick. Price came back up there. Let's go down to daily. On daily time frame, whenever you have like pink candle liquidity and we break it with a favorable gap, oftentimes we will go back towards or the beginning of the candle or consequent encroachment. It depends, but whenever we are at the lowest point of that candle, here you might expect some kind of a reversal. Let's go down to 4-hour time frame. And on 4-hour time frame, you want to see this SIBI, sell side imbalance, buy side inefficiency, or favorable gapping in simple words. Let's go down to 1-hour time frame. This is how it looks on hourly. 15 minutes time frame. On 15 minutes time frame, so that's the pink candle liquidity from daily. You can see that. And besides that, I want you to pay attention that we took pink candle liquidity. That's the daily session. That's now the Asian session. And once the price reached that point, it took the liquidity. Let's go down to 5-minute time frame. 4-minute time frame, 3-minute time frame. Yeah, let me bring back this so that you can see on lower time frames as well. Here you go. So 3-minute time frame, 2-minute time frame, and here you see the beauty. So what do you see? You see that this is the pink candle liquidity from 15-minute time frame. We took that liquidity and you have 3 up close candles, and the last one is the biggest one. So all of those 3 up close candles, that's bearish order block. And you do take the lowest point, the highest point, and make projection to the downside. And you look for 2 to 2.5 standard deviation and up to 4 standard deviation, but it must go together with some kind of liquidity. So look at that, beautiful, isn't it? Delivers to standard deviation, reverses for a little, consolidates, and goes back down to 4 standard deviation, and then goes back up. So, and what liquidity would be you targeting here? Here I see this favorable gap, so that's the first one. You could be targeting this favorable gap. And besides that, there is flat candle liquidity on the way down to 4 standard deviation. Could be exit over here. And 50% of that wick or the low. And I wouldn't go like this, but here for that, because you don't want to go all the way down to below 4 standard deviation. Sometimes it's not gonna reach, so you gotta be expecting low hanging fruit objective. You can see that price was trying to reverse in here, so just look for tiny target, and this is it. So what about entry and stop loss? The entry could be on this candle. So once the opening price was violated and this short-term low was taken with this candle, that was sudden move to the downside. Once this candle closed, this low was taken, you could be entering in this candle 3 ticks below the opening price, and this is how it would look. And 1 tick above that highest stop loss, you're targeting 2 standard deviation. That would be 1 to 2.6, and if you were targeting 4 standard deviation, that would be 1 to 4.58. Also, you could be looking for long setups, since on 15 minutes time frame we took relative equal lows, but since myself I have bias short, that's why I was looking for short setups. So hopefully you found this insightful, and until talk to you next time, be well, the best, and take care. Wow, what you just learned here could change the whole approach to trading. Are you ready to take the next step? Your next big insight is just one click away.